Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of September 9th through September 13th. We're in part one of our weekly trading game plan. We'll try to help you make money trading what's called the September effect. So let's get started. Here's our Google document with our notes for part one of our weekly trading game plan for September 9th through September 13th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. With our notes, documents contain links to bonus videos, the tools and resources we use to do our market analysis, come up with our trading strategies, trade ideas for this trading week. We store all of our weekly trading game plan notes documents in a publicly accessible Google Drive folder, so you can refer back to the weekly trading game plan notes for this week as well as previous weeks. And you can find a direct link to this publicly accessible Google Drive folder and this week's weekly trading game plan notes in the description box below. Welcome, MD. Thank you for joining us today. Hope you had a great trading week and are doing well. So firstly, we'll see how the markets ended up on Friday. Again, talked about the September effect and for the seasonality of trading in September last week, and we'll talk about it more again this week. But again, a pretty red day on Friday. So there's started out with a little bit of an attempt at a rally and then pretty much a down day. And we got a pretty red candle on market on close. So all the indices were down. The Dow down 1%, NASDAQ down 2.55%, S&P down 1.73%. So again, a pretty red day for the first week of September. Again, we got many more decliners than advancers, 77% decliners, 19.7% advancers. We got about 50% new lows, about 50% new highs. We've now got 56% below their 50-day moving average, about 44% above, but we've still got 58% above their 200-day moving average, about 42% below. So although this shows just slightly bearish, it was a pretty bearish day. See the heat map, almost all red, Mag 7s, heavily red. Semiconductors took a big hit. Again, most of all the Mag 7s, deeply red, Tesla, etc. Just a few in healthcare, green, and Verizon. Welcome to Ricky Khan, LinkedIn. Thank you all for joining us. Hope you all are doing well. Got some of the news. We'll talk about the August job reports. Dow logs worst week since 2023 after softer than expected jobs report. Economic worries. So again, we'll talk about the impact of several of the jobs data. So they're talking about recession now again, although I'll give you my opinion as we go forward. NASDAQ leads losses after mixed jobs report. So you again see all the focus was on that jobs report. S&P tumbles Friday, the worst week since 2023. NASDAQ worst week since 2022. So again, we talked about the September effect, and we'll talk about how to make money trading in this September market with the September effect, the late September swoon, etc. Saw oil break down below 70. It actually broke its 52-week low, 60 in the low 67. So we'll see if we get a further decline in oil. Natural gas did bounce back up over 220. Gold's been kind of hovering 225 to 250. You see all the futures on all the indices are heavily red, heavily pointing down again. Saw Treasury yields break down. I think the 30 at some point actually broke down below 4%. You can also see now the yield curve is uninverted. So I believe all the yield curves have now uninverted. You can see the 10 and the 5 are significantly below 4%. And again, I think the 30 years testing that 4% level. So we'll see bond prices all bounce back up. CMD is commenting that Tom Lee said another 7 to 10% down is possible. Again, we'll look at all of those. Okay, we'll look at a breakdown of the major indices. And just a quick reminder, you can find these screeners in the notes, also in the screener sheet of our ETFs and Watchlist Google Sheets. So you can get a breakdown of all the major indices and the technology components quickly and easily via these screeners. So if we look at all the indices, see the Dow had made a new high, broke above that upper trend line, rejected as of the beginning of September, came down to its near-term moving average. Looks like it's got some support there. As we'll see, the Dow has been a little bit stronger than the other indices. See, the Russell broke down below its near-term moving average, headed down. It's got plenty of downside, both to its longer-term moving average and that pivot point at about 200. So again, significant downside in the Russell small caps. See the Qs again, steadily down, approaching its 200-day moving average. So again, more downside to that moving average. Further downside to test the August low and the lower trend line. S&P also broke down below its 50-day moving average after kind of bouncing off that double top resistance. So plenty of downside again down to that lower trend line, also to retest the August lows. And the 200-day moving average again is below that August low. So again, plenty of downside. So as MD pointed out and Tom Lee pointed out, plenty of potential downside. And again, that's all part of the September effect that we'll continue to talk about. We look at a breakdown of the technology components, and we see ARK-K broke down below its near-term moving average, headed down, got plenty of downside risk. Looks like you got some support at a pivot point, but again, plenty of downside to retest the August lows in ARK. See the FANGs a little bit stronger. They're holding up on their longer-term moving average, just barely broke below that longer-term moving average. And again, plenty of downside to test that August low and that pivot point. And that August low looks like a multiple bottom, so the FANGs could gain some support at that level. Again, these are all the leveraged long ETFs of the technology components that we watch. And when we get to our ETFs Google Sheet, we'll look at the leveraged shorts that correspond to these. So FANG-D, SARK, LabD, SOXS, etc. So biotech held up a little bit better. Looks like it's got some support from its longer-term moving average, but it's kind of oscillating now between those shorter-term and longer-term moving averages. Semiconductors again took a significant hit on Friday. It's getting close to testing its August low, but again, it's now significantly below its longer-term moving average. The shorter-term moving average might get a death cross, with the shorter-term moving average crossing below the longer-term in the near future. Talked about the NASDAQ. TQQQ is the leverage long on the NASDAQ, so it's going to just behave like the Qs. And the broader technology, again, we see that weakness in technology in general. Plenty of downside to its August low, significantly below the longer-term moving average. And the short on TECL, the broader technology, is TECS. So again, we'll talk about all the leverage shorts when we get to our ETF Google Sheet. Okay, let me grab a quick drink and we'll look at the breakdown of the sectors, industries, etc. Okay, if we look at a breakdown of the sectors and industries, the groups tab in FinBiz, so we can see everything, all the sectors were red on Friday. The least red was consumer defensives, healthcare, and real estate. So again, decline in bond yields is positive for real estate, but they were still slightly negative. Most negative technology, consumer cyclical, again, heavily with the Mag 7, and communication services, again, have heavy technology related. Energy, again, oil down, basic materials down, financials. Again, we'll talk about, potential sector rotations in the downtrending market and where we might find some opportunities to make money trading this September effect on a downside sector rotation. So for the week, again, the strongest were defensive sectors and the decline in bond yields, a decline in interest rates benefited real estate. So utilities, defensives, again, all very defensive sectors. And once we entered September, very defensive bent. Weakest technology, energy, communication services. Again, we can see that sector rotation out of some of the stronger sectors that had been strong, financials and industrials. So in my humble opinion, I think we might see further sector rotation, profit taking out of some of the sectors that had been strong, and again, rotation possibly into some that have a higher value, more attractive PE, etc. So again, I think there's some opportunities, more profit taking out of financials and industrials that had been strong, as we'll see for the month. The financials were the top performer. Industrials positive. The only weak ones from the month were communication services and energy. So again, just a reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content should be considered education and entertainment purposes only. But again, in my humble opinion, I think we might see further profit taking out of technology, out of the Mag 7, out of some of the sectors that had been strong. And so we may see a sector rotation out of things like financials, industrials, technology, and possible rotation, possibly back into energy or basic materials. You have to watch those sectors to see where those opportunities for a long is. But you can see when the profit taking occurs, where there may be opportunities to short in a sector in an industry. So if we look at a breakdown of the industries, again, the strongest real estate, REITs, residential construction, everything pretty red on Friday. Steel negative, talk about that at some point. So again, heavily red. Oil and gas negative. See, gold is pretty negative on Friday. Uranium negative on Friday. Again, we'll talk about that as well tomorrow, but I think uranium got pushed down with the overall sector rotation out of energy with the oil and oil prices dropping. I think XLE sector rotation out of energy pushed uranium down. I think there's an opportunity there. See, we'll see silver rejected off at 30, so it was heavily down on Friday. For the week, positive REITs, again, real estate positive. So again, if you're looking for sectors that'll hold up long, real estate right now, we know we're going to get rate cuts. We just don't know how much, how soon. But again, that will benefit real estate, the REITs. Very negative. Again, financials, banks, rotation out of financials. Steel pretty negative. Coal, again, energy. Again, silver very negative. Coal, again, negative. Uranium for the week. For the month so far, got some positivity, mostly real estate, REITs, some healthcare. Gold was positive for the month. Silver, slightly negative. Again, the most negative, energy, oil, etc. And semiconductors. So I hope that all helps. Okay, next we'll look at the economic data we got this week. We'll talk about how that impacted and exacerbated the September effect, the negativity in the market, some of the concerns about that economic data, and then we'll look at the economic data for the upcoming week. Just a quick reminder, as the important economic data and news comes out, I try to post it as quickly as possible in the Surf the Markets channel in our Discord. We would highly recommend and love to have you join our Discord. Our Discord's free to join. You can find a free invite in the description box below. Again, a great way to get real-time economic data, economic news, as well as discuss all topics related to trading with your fellow traders. So again, here's the Surf the Markets channel in our Discord as the important economic data comes out. Try to capture that from investing.com, the screenshot, the raw data, etc. Also, as important news comes out, oil inventories, etc. Post those all in the Surf the Markets channel in our Discord. So again, great way to get real-time economic data, etc. is joining our free Discord. So Monday, hope you all had a great Labor Day holiday weekend. Had a nice long weekend. Didn't have much Tuesday, Wednesday. Thursday, we got Challenger job cuts and ADP non-farm employment. So we see we got more job cuts, although the year-on-year rate's much lower than the previous, so 1%, but we got significantly more job cuts. We also got the ADP employment change was much less than expected, and as we'll see in all this job data, it looks like the job market has been softening a little bit. Again, we get initial claims, although again, not drastically, so no panic mode for the Fed, as we'll see in all this data. So initial claims was lower than expected, so fewer people losing jobs. Continuing claims lower than expected, so again, people are still finding jobs. The 4-week average is pretty stable, so again, looks like the labor market slightly soft, softening up a little bit, but not dramatic. Productivity went up, so that's a positive. Unit labor costs went up, but less than expected. So no concern about a wage price inflation spiral. Then Friday, we got the non-farm payroll data. Again, exacerbated. You saw all the news discussing how that exacerbated the downturn in the market. So the main non-farm payroll data came in at 142K, expected at 164, so much less than expected. Manufacturing jobs actually negative, so there's a loss in manufacturing. We've seen a slowdown in manufacturing. Also, private payrolls significantly less than expected. Participation rate unchanged. The U6 unemployment also went up a little bit to 7.9, but the overall unemployment was stable at 4.2. So again, not, the Fed, Powell's commented they didn't want to see a further jump in the unemployment rate, and that's relatively stable. So again, although the market took that very negatively, now there again talks about concern of recession. The probability of a 50-point rate cut kind of oscillated a bit. I think it's hovering at around 50-50 right now. So we'll look at the rest of the economic data in investing.com, and then talk about the upcoming economic data for next week. Okay, let's see what else. So global manufacturing, again, below 50. Again, all our manufacturing data is showing a slowdown in manufacturing. We saw a decrease in manufacturing jobs. So again, all the manufacturing sector is telling us there's a slowdown in the economy. Bond yields relatively stable. Mortgage rates dropped a little bit. Applications went up. So again, good for the housing market. Drop in bond yields, drop in mortgage rates, positive for real estate in general, housing market. Global orders, pretty stable. Factory orders, pretty stable. Jolts, again, a little bit of a tightening, so fewer open jobs. So the Fed, they'll see a more balance in the job market. Crude oil inventories down significantly, but again, we saw crude oil price drop below 70. Talked about challenger job cuts and ADP data. Global services positive, so manufacturing is contracting, but services, non-manufacturing activity is positive above 50. Natural gas storage up, but less than expected. Again, we saw natural gas prices bounce above 220. Bond auctions pretty strong. Talked about the non-farm payroll data. And again, then we had several Fed officials coming out commenting on the payroll data and what that might mean in terms of rate cuts. I think it was Waller said, it's definitely time to start rate cutting. They're just not committing to how fast and if they're going to go 25 or 50 in September. But they're all pretty much saying we're going to get rate cuts. It's just a matter of how much, how fast. So we'll see those. Baker Hughes oil rig count stable, total rig count slight decrease. So again, not seeing any decrease in oil rigs at this point. Also part of the decrease in oil prices, I believe, is OPEC had been talking about increasing production, and they had a meeting and decided, at least many of the countries in OPEC decided to hold off on production increases, but that didn't seem to hold up the oil price significantly. So if we look at the economic data for next week, Monday, we've got some wholesale inventory, some bond auctions. Tuesday, we've got small business, an OPEC report. Wednesday, we get mortgage data, and then important core CPI data. So again, the markets will be watching this closely, see if inflation is still sticky. If we do get sticky inflation, or if it happens to have bumped up, that'll be pretty negative for the markets, because again, that'll mean that the Fed will want to hold off cutting rates to keep inflation down. So again, Wednesday, CPI data. Thursday, we get PPI data. So again, we're getting the supplier inflation after the consumer inflation data. Again, same thing. Markets will want to see that inflation on the front end of the curve is coming down. Again, we get another read on initial jobless claims, continuing claims, etc. We'll see if that continues on the trend of slightly stable. Friday, then again, we get Michigan sentiment data. So we'll see the trend had been slightly down below 3%. So Fed will probably want to see that the consumer is seeing inflation coming down, hopefully sentiment improving. We'll also still have some earnings, although again, we should be through the vast majority of the major earnings. We do have some, so it'd be worthwhile to keep an eye on the earnings calendar, both in investing.com, and I'll show you where that earnings calendar is in Webull. Oracle will be somewhat important as a cloud player. AI, see what they say about AI, their AI business, their cloud business, so that may impact some of the other Mag 7 cloud providers, etc. Got some other technology. So again, you can go, again, we're getting towards the end of this season. Okay, so we got the meme stock, GME on Tuesday. So maybe we'll see some meme stock hype around that. We should be winding up this earnings season, and then we'll start over again. Got Kroger, Adobe, etc. So pretty short list, so we should be winding down. You can hear how we make money trading around earnings in the link to the video in our notes. Also, just a quick reminder, the next FOMC meeting is September 17th and 18th. So then we'll get the rate decision. We'll also get another dot plot, see what their projected rate of cuts is. Okay, let me grab a quick drink and we'll look at the market screen in Webull. Just a quick reminder, if you're not already using Webull, they're still offering up to 75 free fractional shares of stock, plus a bonus 2% interest rate for a total of 7% for the first 30 days. And if you open your account with 25K or more, you get 75 free fractional shares of stock, 7% interest rate. Below 25K, get 20 free fractional shares of stock, still that 7% bonus interest rate. And each of those fractional shares is worth $3,000 to $3,000. We use Webull for our market analysis, due diligence, and the majority of our trading. And if you'd use our affiliate link in the description box below, you can get your free fractional shares of stock, bonus interest rate, any other promotions they're offering, and help support our BeachBum trading community, which we greatly appreciate. I'm using the market screen of the online browser version of Webull. So here we can see the histogram of decliners and advancers from Friday. So we can see we had many more decliners than advancers, about 3 to 1, more than 3 to 1 ratio. And the percentage of decline was generally pretty small, but we had a significant amount of larger decliners, very small percentage of significant advancers. Thought the net inflow was interesting. So both NYSE and NASDAQ, NYSE started out a little positive, went negative, and then was negative up until the afternoon, and then went positive into the end of the day. So that was interesting recovery in the NYSE. NASDAQ, steadily downtrending, made a little bit of a rally, and then significant down in the day. So we see that continue. A rotation, outflow out of technology, out of the NASDAQ. Welcome, Walter Lyons. Thank you for joining us. Hope you had a great trading week and are doing well. Quick reminder, you can see the near-term earnings calendar as well as dividend splits, etc. in the calendar section in Webull. So again, a great place to see what earnings are upcoming in the very near term here in the market screen in Webull. Let's look at the best performing industries for the week. Going to be, pretty small. So defensive, food and tobacco, beverages, defensive sectors, utilities, again, real estate, REITs, utilities, so again, very defensive. Telecom and utilities. Some utilities, more utilities, retail pretty negative. Look at the ETFs. So again, strong downtrend. There's the leveraged short on the NASDAQ, SQQQ, short on small cap, short on the Russell, short on the Dow, short on the S&P, short on mid caps, up on the VIX. So again, we'll see in the futures, the VIX popped up. I think it ended up around 2230, 2240, and we'll see the futures is lagging a bit. So significant opportunity in the leveraged long on the VIX. So these are all leveraged long on the VIX. Short, small cap, short the Russell. Industry-wide, this small industrial, real estate, again, almost, all red from Friday. Commodities, natural gas. That's the yen. We'll see this in the ETF's Google Sheet. So let's look at the futures. Just a quick reminder, you can now trade futures also in Webull, so you can find more information about that via the link to the topic in our Discord. So we see all, as of September, with the September effect, as we've been discussing, steadily downtrend in all of the major indices. Dow had made a double top, downtrended. It's got plenty of room to decline. S&P similarly, looks like it's getting close to filling that gap. Might find some support at that 5,400. NASDAQ, again, plenty of room down to the August low below 18,000. Russell's, again, got some room to test that August low. So, negative reactions in all the foreign markets as well. So Euro, Nikkei, DAX. Again, with the VIX, I think is sitting at 2240. The VIX futures are still lagging, so it's only just about 21. So again, I haven't seen Katon Easy Mike, but he's been pounding the table that VIX futures were cheap. And again, the VIX futures are still lagging the actual VIX. So again, it's a little late. We've had that pop up, but if we get a surge in the VIX, long in the VIX, and again, we'll see our ETFs. We've got long and short. So if you're nimble, maybe some opportunities there. And we saw oil break down below 70. So we'll talk about potential opportunities. It broke its 52-week low. We'll see that again tomorrow. And again, we'll talk about some potential long opportunities now in oil. Again, natural gas broke above 220. So we'll see if that trend continues to trend up. Again, gold been pretty range bound, just consolidating along that 2550 top. Little dips down. Silver again got rejected off 30, came down, got support just above 28, retested above 29, came back down. So we'll see if that downtrend continues. Copper down. Again, there's talks of recession with the weak jobs report, etc. So slow manufacturing, so I think that impacts copper some and some of the industrial metals. So the agricultural, the grains, they were running up, kind of peaked out, and all of them started to kind of roll over. So corn, oats, wheat, again, had a nice run, and we're still long wheat using the WEAT ETF that you can find in our ETFs Google sheet. If wheat continues to downtrend to retest that 550 level, we might stop out and look for an opportunity to re-enter lower. So we'll see if it swings back up, or again, if it's going to come back down and retest that 550 level. And we saw bond yields decline, so bond prices popped up. Looks like the 30 was close to testing its previous August high, didn't quite hold that. So again, we'd expect, further uptrends in the bonds as we get closer to the rate cuts. So again, we see the shorter end of the curve surged up stronger than the longer end of the curve. So we see the 5s made a new high, 2s made a new high, 10s made a new high, and 30s are lagging a little bit. The DXY back up over 101. So, and we saw the yen uptrend again. So Easy Mike, I didn't see him again yet today, but he wanted to talk about the yen carry trade again. So potentially, maybe we're seeing a resumption of the unraveling of the yen carry trade. So again, saw the yen had been pretty flat, consolidating. It looks like it's trending back up. So maybe we're seeing further unraveling of that yen carry trade. And the last time that triggered, obviously, we had that volatility spike. So it may be a further catalyst for additional volatility, as well as exacerbate the downtrend in the market. So again, something to keep an eye on. And again, if Easy Mike is around and has any further information about further unraveling of the yen carry trade or additional news out of Japan, that might exacerbate that trend. Love to hear it. Okay, next we'll look at our ETFs. So again, as we identify potential opportunities, both to trade the September effect as well as just in general, be it long or short, trade idea on any index, topic, commodity, etc. We then jump over to our ETFs Google sheet, and we can find an ETF with the type of risk reward profile, leverage, etc. that we would like to trade that trade idea. And again, you can get access to our ETFs Google sheet as well as our other Google sheets by joining our Patreon. So if anyone in the chat has any particular ETF you'd like to take a look at, please throw that up in the chat. We can take a look at those. Otherwise, I'll focus on ones again related to our theme for this week, which is making money trading the September effect. So let me grab a drink and we'll go over our ETFs. Again, anyone in the chat wants to look at anything in particular, please throw that up now. Okay, again, since we're talking about making money trading the September effect, and the September effect, as we'll talk about again, is the fact that seasonality, September is the worst trading month of the year from a historical standpoint. So we'll be looking, we saw the downtrends in all the markets as well as in the futures. So we're looking for, short opportunities. And again, you can find inverse ETFs, so short opportunities that you can trade also in retirement accounts, via whatever theme, topic, index, etc. you want. also with the risk reward profile that you're looking for. And if you're looking for leverage products, again, we talk about SARK to short RK, LabD to short biotech. You can see that's a 3x short. The long is LabU. So again, we have these short ETFs, some of which are leveraged that you can trade downtrends. And again, we'll talk about that again as part of our theme. So SDOW is the short on the Dow. FANG-D is the short on the FANGs. Talked about gold. We've got several. You can long or short, trade that volatility at gold. Mexico's been pretty volatile. Here's the short, leverage short on the NASDAQ, SQQQ. Long or short natural gas, so it's been trending up. So oil long, cold short, or UNG, UNL. You can also find longs and shorts on individual stocks, so things like NVIDIA, short NVDS with some leverage. We also have additional ones in our research sheet, so you can also find several to long or short, various other like AMD, Apple, etc. So if you're looking for an ETF to short individual stocks, some have leverage, some don't. So again, if you're looking for one, you can do a find on various individual stocks and find ETFs to long or short that. Oil, short drip, long gush. Here's the S&P and this one the Russell. So short the Russell, SRTY, short S&P, SPXS. Semiconductors, SOX, S. Also got a SSG, so you can compare the risk reward profiles, leverage for those, whichever you'd like. So we saw the small cap, bear, TZA is getting popular. Again, TECS is the short on the broad technology sector. And Tesla, long or short. Various ones to long or short, various bond durations. Also, we have volatility, so several to long, volatility, VXX, UVXY, so you can see the different leverage. And short, SVXY, again, volatility, the VIX tends to retrace pretty quickly, so you need to be nimble. And we talked about that yen carry trade, so YCL is the long on the yen, YCS is the short, or you can just trade the direct index, FXY. So again, plenty of opportunities. We talked about wheat. Again, we're still long wheat. If we do get a dip back down, we may stop out and then try to re-enter that lower. So again, if there's anyone in the chat that wants to look at any other ETFs, please let me know. Otherwise, hopefully that helps you identify. We've also got different sectors. So if we see that profit taking sector rotation, if you're looking for a short opportunity, like we've talked about financials, there's FAZ, which is the short on the financials. We're currently long FAZ, so we're already shorting financials. Industrials, we're long SIJ, which is the short on industrials. So again, you can find longs and shorts for any sector. So if you see that sector rotation, be it a bounce back or a rotation down, you can find an ETF with the risk reward profile and whatever leverage you're looking for in our ETF Google sheet. So I hope that all helps. Okay, let me grab a quick drink and then we'll focus on further on our topic for this week, which is making money trading the September effect. Okay, again, our theme for this week is making money trading the September effect. If you're not familiar with what the September effect is, I added the link to the Investopedia article that describes the September effect. Again, we talked about this last week as well, about making money trading in September. That's seasonally, September is the weakest month of the year. Um, Again, this article talks about some of the reasons behind that, the justification. Again, I also added some articles that we've referred to previously, why people say this September is the worst month. Is September swoon a real thing? So September swoon tends to apply more towards the second half of September. And we've talked about, strategies for trading the September effect as well as the September swoon for several years. So you can see our previous weekly trading game plans going back several years that talk about how to make money trading the September effect, the late September swoon, and also how to make money trading a bear market. So although I don't think we're really in a bear market yet, I don't believe any of the indices are technically in a bear market. We see that downtrend in uh, all the indices, all the markets. So our strategies would be, trading the downside. We might get some, violent corrections, attempts to rebound. It did look like they attempted to buy the dip to bounce the Mag 7s a couple times this week. Looks like those failed and they trended back down, but I wouldn't be at all surprised given we had a pretty strong down week. As you saw, this week was the worst week since 2023 or 2022 for several of the indices, so I wouldn't be at all surprised to see an attempt at a relief rally. So again, trade accordingly on your shorts, protect your profit on your shorts, on your inverse ETFs. In those kind of reverse or relief rallies. But then again, we see the trend is definitely down. The historical data shows September is a down month. And most traders are aware of that. There's been a lot of comments, that September's the worst month. So the tendency will be for people to take profits, um, for it to continue to trend down. So we're going to be trading, inverse ETFs. If you're directly shorting things, you can do that. Again, protect your profits on those shorts or inverses if we see the start of a relief rally. But again, in my humble opinion, I don't expect those relief rallies to hold through September. When we get into October, again, we'll talk about the October effect. But as we saw also in our topics on trading in September through the summer into the fall, we might see a little bit of a rebound into October. So then we'll pivot. We'll flip our approach going into the end of the year. So again, you could see all of our previous discussions on trading the September effect, the late September swoon, also this video, our previous discussions on how to make money trading a bear market, talks about a lot of the inverse ETFs and how to use those to trade in a downtrending, a bear market, even though, again, technically, I don't believe we're actually in a technical bear market. Those would be the strategies for trading in a downtrend. And again, this mentions a number of the inverse ETFs, since we've added a lot more inverse ETFs into our ETFs Google Sheet. So again, we have a lot more ways to trade a bear market, make money trading the September effect, as well as any other bear market since then. So I hope that all helps. And we've been talking about making money trading in September. Past several weeks previously, you can hear how the markets tend to perform, typically the best markets, sectors and industries. Also wrapping up the summer. So then we'll transition into the fall. We'll look at making money trading in the fall. And we talked about sector rotations at this point. In my humble opinion, again, I think we'll look for a rotation of profit taking out of the sectors that have been stronger into sectors that potentially are more attractive, more defensive. So again, I would be looking for that profit taking to occur, and you can take advantage of that again using the inverse ETFs. Okay, I've got a few minutes, so if anyone in the chat has a particular ETF or another topic you'd like to discuss, if I missed your question previously, I apologize. Please throw your question or your ETF, etc. you want to look at back up in the chat. We can talk about that for a few minutes. Otherwise, again, we'd always love your feedback on what we can do to improve our weekly trading game plans, any of our videos, our tools, our Google Sheets, our community, our BeachBum Trading Discord community. What can we do to add more value for all of our fellow BeachBum traders? So we do, again, love your feedback in the comments to any of the videos. In our Discord, again, our Discord's free to join. We've got a suggestion box. So again, we'd love to hear your feedback. You can tag us in our Discord. We're BeachBum Trading, all lowercase, no other characters, numbers, etc. Anyone else is an imposter, and we would not direct message or send you a friend invite without letting you know in advance. We wouldn't ask you for money in the Discord. Again, anyone else is an imposter, please report them and ignore them. You can also contact us via the links to any of our social media sites. You can find links to our social media sites on our homepage, beachbumtrading.com. Bum without the U. You can also find the invite to our free Discord, etc. Again, so plenty of ways. If you have further questions, if you want us to take a look at any stock chart, etc., you can let us know in any of those ways, and let us know what we can do to continue to improve, to help add more value for all of our fellow BeachBum traders, and also help you make money trading, help you succeed in your trading career. So again, we hope you like this content. We'd greatly appreciate it if you'd smash the like button on our content. Help us try to get the YouTube algorithm. They show us some love at some point. And also, we really need your help to directly share our content with your fellow traders, invite them to our chats, repost our content on your social media sites. Again, all to help continue to build our BeachBum trading community for the mutual benefit of all of our BeachBum traders. So we really need and would appreciate your help in continuing to build and improve our community. So tomorrow we'll be using all this market analysis, all these trade ideas, trade strategies to select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. We'll also talk about how we can use dividend payers and several option strategies. While we wait out this September effect, decline in the markets, if we're looking to generate additional income, we can use dividend payers and several option strategies, and we'll talk about those all tomorrow in part 2 of our weekly trading game plan for September 9th through September 13th. So we hope to see you all again back here 10 a.m. on Sundays for part 2 of our weekly trading game plan. So thank you to everybody that joined and participated in the chat, everyone who's watching after the fact. And again, we hope to see you all again tomorrow, 10 a.m. on Sunday for part 2. Thank you again and have a great day.